So we will start with the most obvious one, but also sadly the biggest strategy there is, which is breakout traders. And as you can see, this fishy, he represents breakout traders. So what does he think? He says like, okay, so what goes up must go up, right? So, and what goes higher goes higher. So he literally thinks the market is going in one direction literally all the time, right? So pretty much he says like, oh yeah, I have so bad FOMO. I don't want to miss any trade there is. I just place my buy stop and my sell stop. And the moment the market breaks out of a range, I buy it because the market will go in this direction forever, right? So he can't wait for confirmations whatsoever. He just places his random buy stops and buy limits all over the place. But guess what will gonna happen to these strategies? So now watch closely what is going to happen with this little poor fishy. Chip! So of course he's getting induced. Like what the hell? Why would a breakout trader like make money out of the trade, out of the market? So how does it look now in the markets, right? So of course, like these breakout trader characteristics, it's even horrible to dig into it, but it's so important for you to understand what they are doing because they're putting so many or so much liquidity into the market. It's kind of crazy, but that's just what the number says. And that's why we need to dig into that. So they're getting excited over every movement past a certain price point. So they identify like a structure point and they see some sort of like, in this case, like some sort of a resistance type of thing. And the moment they're putting like a sell stop in here and a buy stop in here. And the moment price actually breaks out of this zone, you see these little breakout fishies, they're all happy and think, yeah, price will go forever in this direction, right? So of course, they love these types of builds up. They identify these areas, right? And see like, yeah, of course, the moment it breaks out, they in, doing it obviously in the different direction as well. And they're just taking these significant structure points and putting their limits all over the place, right? Because they believe the market will go in the direction forever. And when price goes in their past point, pretty much meaning the breakout zone, they're in for the long run, or in this case, they are in for the short run the moment it breaks out of the zone. Like, not make sense at all. They're just doing it like crazy. We just need to understand why they're doing it and how they're doing it. Okay, so more important though, all right? So how does it look in charts? Very, very easy stuff. Like everyone saw that like 50,000 times already. So of course, as you can see, chart breaks out in here or breaks out in here, and they're all in and they think it will go forever in this direction. So what is most important to us though is their stop loss. We don't care really about like where they enter because we would never even consider entering in these areas at all. For us, it's more important of where the stop losses been placed after those people getting induced, because again, the market will come for the liquidity, which is their stop losses. So the liquidity can be two parts of it. Liquidity first is where they enter. That's the first stage of liquidity. And the second stage of liquidity is where they're getting out. Because then, of course, they're out and putting the money into the market, and that's how they enter it. Enter, exit, okay? Two stages of liquidity, always the entry point and the stop loss point. For us, it's obviously both is important, but the stop loss areas is more important because we will use it as key areas later on. But very easy stuff. How does it look in action? Very easy stuff. Of course, you see these fishes trading here, right? Of course, like, oh yeah, there we go. Prices go. Oh my God, pullback. I don't care. There's another breakout point. Okay, now we go. Breakout fishes entering another point, and of course, another point. And that's what they think the market is due forever. So the moment price makes a valid structure point, the moment it breaks out, they're more like continuation traders. They're of course adding into all these zones. But again, we don't really care about that. We care about their stop losses being placed below the structure points, right? So we understand when they enter and of course when they're getting stopped out. Because in order to stop out all these breakout fishes out of the trades, where does price need to go in the most extreme case. So if price did like this, so first people entered here, oh yeah, breakout, okay, oh yeah, breakout, oh yeah, breakout. So what needs to happen, worst case for them, in order to stop everyone out? Of course, very easy. Hint, the extreme case will make them lose money, all of them. An extreme case, price just needs to make like that. Of course, so whatever, easy stuff. If you just look at an easy chart example, what do we have? The first trend is forming, breakout traders entering here, new high, breakout traders entering here, new high, entering here, new high, entering here, entering here. So see, it works pretty good in hindsight, right? So now we have pretty much a more significant zone that breaks out. Awesome. Now a little bit more there. Okay, awesome. Breaks out here. Oh, and this one is a really big one. And oh my God, look at that one. And out of a sudden, this huge candle appears to break out all these zones and makes them all excited. So now they're seeing this huge candle, like, oh my God, this thing goes to the moon. No doubt about that. Breaks out of this zone. So guess what happens? Oh no. So all these breakout traders being built up here, building up here, building up here, building up here. And finally, the final inducement zone, all the breakout traders entered in this area with this huge candle that makes everyone excited. So now the technicals plus the emotional side of it sticks into it, and they're all being stopped out immediately, right? But wait, right? If we keep going down to stop people out who are long, then the traders who are going short can win easily, right? So how can we stop these traders out of all directions? You might be thinking like, how does it work then? So technically price would move like this, right? But that sounds kind of strange, because again, if they getting stopped out here, induced here, stop loss goes above here, induce them here, oh, that's kind of weird. So you're probably thinking like, what? That doesn't make sense. So no, the market never moves like that. So, well, yeah, you said that because you're correct. So that's why we need to identify it properly and make a little bit more sense out of that. So does it look more familiar like this? So when the price makes like this, goes for this stops, right? So now breakout traders entering short, they're putting the stop above here, right? So guess what happens after? So they're building a reaction. So first of all, this is getting stopped out, getting here. Awesome. Oh shit, now they getting stopped out. Like, of course, now they getting a breakout opportunity in here. So this people getting stopped out, but also new breakout fishes entering along inside here. They're putting their stops below this area, of course. So guess what? Oh no, getting stopped out here. So now they have a new zone where breakout traders enter. See the fishes in here. They're putting the stops above here. Oh no, they're getting stopped out. So guess what? They're entering long. So guess what? Oh no, they're getting stopped out here. Oh no, where did they put the stops? Oh shit, new breakout traders entering here, here. And that's literally what's going on all the time. And again, that looks a little bit more familiar. And that just shows you how many breakout traders just using a breakout strategy is getting induced all the time, getting stopped out all the time, over and over again, right? So in this type of manipulation is really important to understand, because they're doing it with everything. They're not doing it only to breakout traders. They're not doing it whatever on the 1 hour time frame. It doesn't matter if it's a weekly time frame. It doesn't matter if it's the 5 seconds time frame. It does not matter. They do it on all time frames and to all these traders. So it doesn't matter what retail strategy it is. It's always the same thing. And I will show you obviously in a bit. So why is it on all time frames though as well? Because there's a very good quote which says, people are stupid at all time frames. A little bit offensive, but it is unfortunately what it is. So again, like a person, they just sees the chart and it doesn't matter what time frame it is. That's why it's always the same. And if I show you charts, it wouldn't matter if it's again a 1 minute chart or 1 hour chart. The price action with the strategies are literally always the same. You can call it fractal. It's literally always the same, right? But of course, we need to understand now more reasons and not only the breakout trader, because of course people have more reasons than just these obvious ones.